Ever had this happen to you? Why does this keep happening? Because you can't tell if it's the top or the bottom, and you probably couldn't read the trend either. By the end of this video, you'll have 3 skills. You'll be able to spot highs and lows in 30 seconds, read the trend accurately, and actually trade with it. You don't need Elliott wave or Fibonacci. You don't need a single indicator. I'll teach you everything in just 10 minutes. Enough talk, let's jump right in. So this means I can catch the exact bottom? No, nobody can know that. What you'll learn today is the highs and lows that form every day on any chart. These highs and lows become an edge you can use in the market right away. Not sure what I mean? No worries. I'll show you one step at a time. Remember this. Check whether price breaks past the candle body line. Ignore the wicks. Again, highs and lows are confirmed in this situation when a candle breaks past the reference candle's body line in the opposite direction. When you're looking at the body line, ignore the wicks. Right now, this looks like the highest point on the chart. But is this actually the high? The answer is we don't know yet. So when do we know? Still not yet. Now we know this was the high. Confirmed. This was the candle that broke the body line in the opposite direction. Once this candle appears, that's when you know this was the high. After a high, we need to see a low. Let's look at it together. Is this the low? We don't know yet. Still don't know. There's the low. It broke past that body line in the opposite direction. Once this candle appears, that's when we know this was the low. Starting to get the hang of it? Highs and lows always come in sequence. Let's keep going. There's the high. I'll mark it. You can see why this is the high, right? A candle broke below the body line in the opposite direction. Now let's speed this up. Quick pause. When this kind of candle shows up, you usually want to pay attention. See how short this body line is? That makes it really easy for another candle to break it, right? Did it break it or not? When it's this unclear, you can just skip it. The next one broke it. Is this the low? No. For this to be the low, it needs to break this yellow line. Don't get confused here. Wait, that tiny candle I told you to pay attention to earlier. But right now, we're looking for a low. It's above the current reference candle, so it doesn't mean anything. Let's keep going. There's the low. When you see a short candle like this, pay attention. High confirmed. This was the low because we got a candle that broke this body line. Is this the high? No. For this to be the high, we need a candle to break this yellow line. You can tell that's not easy, right? When you get a big candle like this, wait until a short body candle shows up. There it is. Pay attention. Here's the high. Is that really all? Yes, that's it. It doesn't matter how long it takes to go from the high to the low. It could take months to go from the high to the low. And the opposite is true too. Why do we look for highs and lows? To read the trend. Trends are created by the whales moving the market. Today, we're going to learn how to read the trends these whales create and how to ride along with them. Instead of just drawing lines on the chart, there's a more accurate way to read the trend. That's highs and lows. The key is, they have to move together. If the highs and lows are both moving higher, that's an uptrend. If the highs and lows are both moving lower, that's a downtrend. A lot of people don't even know this simple rule. Let's go back to the highs and lows we marked earlier. From high 1 to high 2, we got a lower high. From low 1 to low 2, we got a higher low. Remember, I said they have to move together. So what does this mean? That means there's no clear trend. I said trends are created by the big players moving the market, and we need to ride along with them. No trend. That means we don't need to force a trade. In such cases, it's better to pass. Let's move on. From high 2 to high 3, we got a lower high. From low 2 to low 3, we got a lower low. They both moved lower. Now we have a trend. This is a downtrend. This time from high 3 to high 4, we got a higher high. From low 3 to low 4, we got a higher low. The high and the low both moved higher. That's an uptrend. Starting to get the hang of reading trends? Once you can identify highs and lows, it becomes really simple. Be honest. Why are you watching this video? You're not just here to learn theory, right? You're here to make money from trading, right? And this isn't just a crypto thing. Stocks, gold, whatever chart you're looking at, it doesn't matter. This is an edge you can use for life. I'll show you how to enter and how to know when to get out. We said we're going to ride the trend created by the big players, right? If big players push it up, we go long. If they push it down, we go short. That's it. Don't fight the move. Don't fight the trend. You see that? I always have my highs and lows marked on the daily chart too. So you always need to know what trend you're trading in. Let's look at a real example. This was the most recent short-term high. You see the downtrend here, right? Since we're in a downtrend, we have to get ready for shorts. And if we want to maximize profit on a short, of course we have to enter short near the high. We wait and see if the next high keeps the downtrend intact. Then we can look to enter short right away. And look, we got a small-bodied candle right here. High confirmed. The downtrend is still intact. The moment price breaks below the body of this candle, that's where we enter short. From here, it's all about trade management. Since we read the trend on the daily chart before entering, we're going into this with a longer-term hold in mind. Stop loss, take profit. We don't make that call until the candle closes. The most important thing is whether this downtrend stays intact. What if the next high comes in higher, or the next low comes in higher? That's when we start managing the trade. What if, instead of breaking below the body line, we got a bullish candle pushing up instead? Then, of course, we stop out. We entered because we were looking for that high to get confirmed. Remember, we said this is based on the daily chart, so we're giving the trade more room. The moment the candle closes bullish, we exit and take the loss. If the move up is too strong, we can always exit before the candle closes. That's what trade management is. The next high and the next low kept the downtrend intact too. Our exit criteria is simple. We close the position when this downtrend ends, but we still need to manage risk, right? It's smart to lock in some profit along the way. Since we got a nice move down, once the next high was confirmed, I would have taken profit on about 30 to 50% of the position. The next high keeps the downtrend intact too. From here, we can sit back a little and watch. We've already locked in a decent amount of profit. Even as of today, when I'm filming this, the downtrend has still been intact. But now, for the first time, we're about to get a higher high. That's when I'd close out the entire position. Or since we've already taken enough profit, we could take another 50% off the remaining position and keep watching. You might be thinking, come on, isn't this just cherry picking? Let's look at the previous chart. The highs and lows are both moving higher. Since we're in an uptrend, we should be looking for longs. To maximize profit on a long, we want to enter near the low. We just need the next low to keep the uptrend intact. When this candle breaks above this line, that's where we go long. Now the most important thing is whether the uptrend stays intact. We entered here, and this candle already dipped below my entry. We don't stop out here. We wait for the candle to close before making that call. Same thing here. Price already dipped below my average entry. But if the next candle closes bullish, we can keep watching. The high already moved higher, and if this area gets confirmed as the low, then we get a higher low too, which keeps the uptrend intact. This is where we need to stop out. Even if the next candle closes bullish, the lower low is already confirmed. This is how mechanical your decisions need to be. Want to look at another one? It's an uptrend. We have to get ready for longs. We got a small-bodied candle here. Time to pay attention, right? The moment it breaks above this line, we go long. Now let's see if the uptrend stays intact. We got a lower high. When this candle closes, we close the position. That's how you trade with the trend. If you're trading off the daily chart, you'll get chances to catch big moves like we saw earlier. The downside is you get fewer setups. So this works better for swing trading. Of course, you can always drop down to the 4-hour or 1-hour chart. Just remember, your holding period should be shorter than on the daily chart. When people start learning charts, they try to learn everything. Impulse this, pattern that, memorize this, study that. I'm not saying any of that is wrong. The point is, do we really need to make chart reading that complicated? We're not majoring in chart analysis, right? We're not trying to get a master's degree in chart analysis. The goal is to make money trading, so let's stay focused on that. I post chart analysis on my channel every day. You can see how I read the market every single day. Charts can be tough, but learning them doesn't have to be. Simple is the best. Let's keep proving that together.